Hello, and welcome to myfinancesteacher.org. A really quick update on the stocks and gold. Stocks are down a lot, and in the previous video on stocks, we did expect a declining phase of this second daily cycle in stocks. However, to be honest, I did not expect this much action to the downside. Obviously, this is really bad for stocks, especially since this decline has started relatively early in the ongoing intermediate cycle in stocks. This cycle has only been going on for slightly over a couple of months. Even if this cycle turns out to be a relatively short one, instead of continuing for half a year, if it continues for, say, 4 months, it's still very early to enter into a declining phase, which means there is still a lot of time for this declining phase to continue and a lot of potential for us to go much lower on S&P 500. On the other hand, this 14-day RSI is already a little bit into oversold territory, so I expect a little bit of a bounce sometime soon. Possible points for the bounce to start is maybe at this 78% retracement. There is some confluence here with the 200-day moving average. This price range, which is also a round number of about 2800, has also proved to be at least a temporary support zone here in mid-May this year and in the end of March. So possibly a bounce soon, followed by a continued wave down in the declining phase of this intermediate cycle. That will take us close to this previous low at about 2730, which means there's a great chance of that previous low of being broken. If that happens, if that previous low at 2730 is broken, the next two support zones are at about 2600. Again, it is a round number, and this level has been a support zone in October through December 2018. And of course, if that level is broken, which is a possibility, the next downside target would be retesting the previous December low at about 2340. Anyway, we'll see if that happens, and in either case, sometime before that, I will have a deeper look at S&P 500 and share my opinion with you guys. Quickly looking at gold, I think gold is a little bit dangerous at the moment. However, there is also a chance that gold is going to explode higher now that it is breaking out of this channel that it has maintained since the end of June. So half of me tells me that I should be careful with gold and gold miners. Another half of me is greedy and I don't want to miss another move up. On GDX, there's a good chance that it retests the highs of 2016. That's at about $32 for GDX. That would be around 12% gain from current prices. But as I mentioned in my previous video, there's also a good chance gold starts to decline very soon. So I want to manage my risk in my greedy pursuit of profits. I'm going to think of some stops. A correct stop, of course, would be the previous low, which is very far down below the current price. So instead, I might set up a stop loss at this low we saw on the 26th of July. That's somewhere at about 27.3. And that would give me a 4% risk. Risk-reward ratio is not that amazing, a possibility of around 12% gain with a risk of 4%. But so far gold is trending upwards, and trend is your friend until it isn't. So that's what I'm gonna do with gold once the markets open, that in an hour or so. But I still hold and didn't sell my silver positions. That's it for this quick update, just in case if you're as excited, greedy and impatient with the ongoing move in gold. As always, good luck in your trades.